Okay. All right. All right. So going into this week close. Let's see. I didn't get a chance to check this Friday, but let's just okay. All right. So, so make that. All right. S&P. Full chart. Just want to get this CTO. So 12, 19, they added. They took off. They added more shorts. These added more long over the week. So they pushed us up over here. All right, cool. And as far as catalysts go this week, we got nothing on Monday, opening up in Sunday to Monday, nothing on those 2 days. But Tuesday, new home sales. We already in consumer confidence. So we already know like going into the open today and into all the way up to Tuesday, either we just have a single direction or we might have like some stalling out in the market. So we can already see there's nothing going into Sunday, nothing going into Monday until we get to Tuesday around 10 a.m. Now, and that could, and around 9 a.m., that could be one or two things where we have that just drive the market in a single direction in particular. But then it also means that we could have just stall in price until we get out to this Tuesday and Wednesday date. So we'll have to take a look at that. Because we don't really have a catalyst up until Tuesday. And then Wednesday is our major catalyst for the week, where we have the FOMC at 2 p.m. and then the Fed funds rate get released on that day. So that's going to be our real major things on those days. So that's the ones we got to really, really kind of look out for, is how we play it on that. Let me get this open over here. We'll come back to that. Going into the COT report, just kind of went over it real quick, but since this middle of July, since the middle of June up until now, all they've been doing is adding on. So they really trying to kind of put a bottom in. You can see that they've been buying ever since this little time frame right here. Try to put a bottom in around this area. They started adding on the 21st, and they've been adding on every week ever since then. And this is like, I brought this to you guys' attention last week before last, that is the first time that they've done this. And we haven't had this much buying since 2020 over here, and then really since August 2020. You can see we haven't had buying this high since these days over here, and we just touched above it over here. So that's kind of our kind of telltale that they trying to do something significant in this area ever since that June 20th date. They've been trying to do something ever since then. Let me see. Yeah. Yep. So we can already see, like, this is the first time we've seen orders from the institution this high um since this high since the 31st of August last year. I mean, not last year, but 2020.
Hi,
And
Corey.
the uh-huh.
I have a question. What are the colors, like the red, the blue, and the green again?
The red is our institutions. The green is like our hedge funds or large size traders that have the amount of money to move the market. That's your, like, Bill Gates, not Bill Gates, but Warren Buffett's, your Blackstones, and those kind of people. And then the green is your retail traders. That's us basically. So you want to pay attention to what the red and the green does. The red and the green can move the market. Even more so when you see significant swings in the red, that lets you know that institutions are at play in these areas. So you can notice that we had a huge continuation at around this area right here in correlation with us taking out this high right here in these two areas. Also, you can see this significant low. This is the lowest we push in from relinquishing shorts in this area. So they were selling along this area, and then they relinquished the shorts, and then we start seeing buying right here. Similar to here, they relinquished the shorts, and then they allowed the market to go ahead and sell off right here. They didn't really add in any buying throughout this area, and they just let the market fall off the cliff until we got back to this area. And that's when they kind of start buying again over here. And you can use this to kind of get an idea as to where the larger institutions are placing their orders at these significant areas. If you add this logic into play, you can kind of get an idea of where they're trying to push the market. Cool beans?
Yes, thank you so much.
No problem. No problem. So let me get the charts open. Get the charts. SPX. Cool. Okay. So we came into this area, and I think the last time we did a session, it was the week before last week. And my logic was that we were going to come and take this high out first. And instead, we went ahead and dropped down into this 4-hour fair value gap right here, which was cool because we set up our play so that we could go both ways on this and then drop down into this. And we still came and took this high out. But notice, even though we took this high out, we came into this gap over here, which we can see on the 4-hour time frame. Came into this gap still right around here to here. And then we still also had this gap that's even higher that we could still possibly trade in. So it's still sort of a 50-50 situation because we are making moves higher. We are pushing up, but we still been like somewhat in a range for the most part. throughout these short-term highs and short-term lows. We're getting inside these little short-term highs and short-term lows, and then we're coming out of them only to push up to these higher time frame areas to make a significant moves from, right? So with us coming into this area, we already tapped 4,000 or 4,000 once, and we backed off from it, right? We left the last imbalance right here between this area. It's the last one on the 4 hour. Let me just double check that on a daily. The daily is from here to here. So we'll focus on the 4 hour, right? So that leaves us this area between 39.21 and 38.75. We can round this to 39.25 down to 38.75. And then we had another little bounce off this volume imbalance right here, this little gap right here, and left this open right here. So I don't know if we come all the way down here unless we have that move drop down here with the Fed rate, which right now they're talking about 75 to 100 basis points that we have they increase the interest rate. So if they are pricing that in, we could see it definitely drop down to this area and then maybe bounce off of this area, because we go back to the past couple times when we had the interest rate. Let's go to the last date was June 15th. And let's look at that 1 hour. So it happened right around here. Actually, this was the date. Let me look at that one more time. 15. Okay. Yeah. So the 15th. Which would have been right around here when it was released. We had somewhat of a immediate push to the upside after this drop. And I think this drop right here was in correlation with this, because this was a CPI release right before the Fed rate. So on the CPI dropped us, and we essentially used they priced in that this drop was going to take us down to a certain level here on this 4 hour gap right here, and they used that to buy it from this area and when we got the Fed rate release. So we could see on the open that it takes us down into one of these areas, and then they use the rate to push it up if they priced it in already. But if not, we need to look out for this imbalance on 4 hour to get taken out. And we could definitely see that if we come down into this imbalance right here. And let me annotate that for y'all. So we're going to be looking at this area right here. That's
I have a
our,
question.
uh-huh.
When you said they are talking about 75 to 100, 75% to 100, what does it mean exactly?
Increasing the interest rate by 75 basis points or up to 100 basis points. I'll show it.
Okay, thank you.
No problem. So these are going to be the two areas. That's our bearish. That's our bullish. If we gonna go bullish, we need to see how it responds here, and it could sell off you could take sales down to this area for sure. But once you get into this area, you need to start watching for rejection. Same thing here. You can buy it from where we are right now to this area. But once we get into this area, this is high probability area that we get rejection from there. So from here. So I'll extend this out. That's where where our primary supply is. This is where our primary demand is right now. There is demand down in these areas too, but we don't get to this area if we can't make it through this. So we need to watch out for these two areas right here. And then what it's referring to as far as the basis points, right? So right now, you can see we are at 1.75, right? For us to go 25 additional basis points, that means we will be at basically at 2, right? We went
Got
from,
it. Got it.
yeah, we
Mhm.
went from they,
1, 2.
the last
Mhm.
one we went to 1.75, so we went 75 basis points on the interest rate.
Okay.
Yeah.
Mm-hmm.
And
Got it. Thank you.
they're pricing in 75 to 100. If we go another 75, we'll be at 250.
250? 250. Yeah.
And that would probably push the inflation rates above 9%, above right or
Okay.
above 9.5%. So that's gonna add pressure onto what's going on with these higher prices of everything.
Right. Mm-hmm. Okay.
It what will happen though, in contrast, it'll make the dollar stronger.
Mm-hmm.
If,
Yeah.
if we get higher interest rates, we get higher dollar.
Dollars. Yeah.
Yeah.
Exactly.
If we get higher dollar, we get lower GBP USD, Euro
Mm-hmm.
USD. So, and we'll touch on that a little later.
Okay. Thank you.
So just like just like SPX, if we look at NAS, we got a similar situation over here as well. We have this imbalance. This one's going to be showing on the daily here, but we can probably get a better view of it on the 4-hour. From here to here, similar, same way as we had on SPX. And what's cool about this is once you understand what's going on with the other one, with one, you can go in and find the same situation on the others. And, like I said, we can look for price to move into these areas for our sales if we want to sell all the way down to this area. But this would be our areas to start looking for buys. Same way over here. If we buy, we know we need to come into take out this high, short-term high here. Let's go to the daily just to confirm we don't have any imbalances. We're in it right now. We already in it. And that's a good sign to say that we go higher on SPX. So if you look at this, NAS is already coming to this imbalance between these levels. Right here. And we've already responded to the low, middle, and the high, right? What'll typically happen is whatever we see NAS do, SPX is gonna likely do the same thing, same way with US 30. So this in correlation has only responded to this imbalance right here. That's on the lower time frame, but we only barely breached this. We almost hit the low of this. So that means that we're likely going to come into this imbalance that's on the 4 hour to match what's going on with this imbalance right here on NAS. And we already came into this. And if we don't do that, we can see on both that we have this bullish imbalance that we can definitely come to and sell off to. So we will want to sell down to this area and we will want to buy up to this area on SPX. If we hold this area, we know we want to take on NAS, we know we'll take out this high over here. That's where our liquidity is. This will be our liquidity on the daily time frame. Another point of interest is this order block right here. This is a bearish order block on the daily. And I know a lot of people like wonder why I always focus on the daily. And it's simply because what the daily is doing is usually where the market is going. And then once you understand that, you know, you can usually map out your trades for the rest of the week based off of what you're seeing on the daily, because this liquidity is going to want to be taken out on the daily at some point. This imbalance is going to want to get filled at some point. And if we can see that we're selling off from, let's say we're here, if we're starting to sell off, this is the high probability area that we're going to come to take out an imbalance area, right? If we were to buy from this location, the logical place for us to buy is, all right, we're going to fill this back up, this imbalance back up, and then we're going to search for the next area of liquidity. Your short-term liquidity is this high over here, but your daily liquidity is up here at this buyer side liquidity. So you know that, all right, cool. If it does buy up, I know I should at least be able to take that out. And if it continues to push up above that, I have bearish point of interest in the form of a bearish order block. So you got those kind of things to kind of help map that out for you, right? And I'm gonna send this. Let me send these to you right quick. So these will be SPX. You said you noticed that, Lex?
Yeah, I had marked up. I think it was at the beginning of the week, and once it broke my daily structure, I was telling Christine this in the class just a while ago, but once it broke my daily structure, I noticed it broke and closed above, and then I was just kind of like monitoring it. But since it broke above, it went up like 400 pips.
Mm-hmm.
And like I was just saying, like I've noticed on the daily, just kind of like back testing how helpful it is to help me see it it helps me see it more clear, I feel.
Mm-hmm.
And then I'm able to have like you said, like the direction, like I can kind of like see in a sense. But my question to you is, if that say that does happen or something, right? Do you still execute on the lower time frames, right?
Mm-hmm.
Like the 15, right?
Mm-hmm.
I remember you saying that.
Yep.
And
I just
so
get the direction from
the other thing is, would you like would you hold it longer and aim for those higher time frames, like leave kind of like a runner in the sense, or how do you manage those trades?
It depends.
Yeah. Okay.
It really kind of depends. If I'm cleanly taking out a short-term high, short-term lows, if I'm cleanly taking those out and there is a new imbalance created on those time frames, I'll go ahead and hold it. If I see it come to a certain area, so let's look at
Corey,
let's
can you show this NAS chart zoomed out?
yeah, sorry.
Can you put that link in?
This one,
Yeah.
like this is
No,
okay.
over more. No.
How about now?
Yes.
Okay.
Can you share that one?
Yeah, I'll share this. Okay. Copy. Yes. So if we were to look at, let me mute somebody. Kind of, okay. So if we were to look at something like, let's look at this low right here on, I'm gonna go back to SPX. So if we look at this low right here, right? And we know, okay, there's an imbalance here. Let me zoom in to some. So, all right, let's say we don't catch this bottom right here, right? But we knew, all right, we came down to this area and we bounced off of this area because we know we know ahead of time that this is an imbalance right here because we would already had that noted, right? Bullish imbalance. We would have already had this noted that this area is a possible area we could see some buying from, right? And we go to our lower time frames and we don't catch the bottom. Let's say we catch the low right here, the short-term low for a trade like this, right? We buying here and we going to take out first. We would be looking to take out this immediate high that we made right here, right? The next area we'd be looking to take out is this high and this high and then this high. That's kind of how when I'm looking for a setup, let's say a buy or a sell, I'm looking at, all right, where's the last high? If I'm looking at a buy, where's the last high? That's the first high I'm aiming for is this one right here. That's going to be my first partial right here, right? And when we took this high out, at the same time we took this high out, you know, once it actually broke, you see how this area right here left an imbalance right here. Brand new imbalance, right? So it didn't just take like, it didn't just like crawl above this high right here, right? This little high that it made right here. It didn't crawl above it, right? It didn't creep above it. It pushed hard through it, right? And made this new imbalance. So that means that once this high was taken out, more buying came into it. So that was a clean break of structure, right? So that means we got a new shift in market direction, right? Just like over here, this high right here, when it was, you know, first came up to it, right? We can extend this out, right? Once we got up to this area, you see how it just kind of played around and it stalled out it dropped down a little bit, but as long as it doesn't close below this, we know, all right, there's a higher probability that this can get taken out, right? But, let's say it doesn't, right? I would have already known, all right, cool. I just made 200 pips taking this high out, right? And if it takes this high out with an impulse, like it did right here, there's a high probability at least it's going to touch this high, right? And it did over here, right? On this candle, right? So if I'm looking to take this trade, I'm taking a big chunk out right here. And my goal would be to at least tap this high right here. If we kept going, I'm going to look for this same high right here to take out this high also with an impulse right here. So once this high got taken out, we left an impulse right here and we extend that out. So now I'm saying, all right, cool. I took this high out. I took this high out, took this high out with an impulse. I took this high out with an impulse over here. My goal now is this high right here. I got to do it with an impulse though, right? And if I don't do it with an impulse, there's a possibility that this is not going to actually take off, right? Played around, it gapped right here. It gapped on the 15-minute. And let's see if we can go up to the 1 hour right there too. Where we at, right? That same high right here, impulse, and a gap right here. So now we can say, all right, cool. All of this area right here is going to hold this high up. And we know this is an imbalance that it could come back to. That's what happened right here. It traded back down to the imbalance and it moved up from there. So it protected this area of price. And then now we take the same approach. This is a new high right here. We got an old high right here. We got an imbalance right here. That means we got a shift in market structure. As long as this area holds right here, I know that I should be able to take this high out. It takes it out over here. We can.
But didn't it take it out before it came back down?
What you mean? This one?
Yes.
Yeah. It took it out here. We got an impulse right here to take this high out. This one kind of creeped up above. We got some impulses on the lower time frame right here to actually take this all the way out. And then it took out some other highs. So it's kind of like gonna look like this, right? For a buy, you want to see impulse candle. Impulse candle. Oh, high, making a low. It doesn't even have to make the low, but you want to see this high get taken out by impulse candle and create a new high. And once it creates this new high, this impulse candle needs to hold. No, and we shouldn't see a close below the low of that area of impulse. The candle that made it or the impulse itself. Or you might have an order block down here. And that should be what holds this up. If you got this high with an impulse and a new high, then you should see a new high created. Once that new high is created here, you want to see this old high hold, a new impulse created within this break right here, and you want to see this area hold, right? And it's going to look like this. Oops, not all that. Right here, it's going to look something like that. This area, once you see this high get taken out with an impulse, that means you have shift in market structure. This bullish shift in market structure right here. That's a bullish shift in market structure. That impulse implies that we have a bullish swing in price. You can see this repeated over here, right? So,
Well, I got a question.
yep.
Please, bro. So the demonstration, I mean, that what you just showed,
Mm-hmm.
when you get that impulse and break of structure and see how it's coming back to it. So I've been using those as entry points. Okay. So my question is like, I guess it's twofold. If you go back to, I mean, you're already there, but if we take it from where you say, you know, you got in at the low, right? And you're looking how to manage and it broke structure. And it's holding when it comes back to those impulse areas, which, you know, fair value gaps, you know, lows, you know, 50%, and then, you know, the highs of them, if you will, going up. Do you consider, because you've taken portions off, like you said, you took your biggest portion off when it broke that first high. Now, do you consider stacking at those areas?
It depends. Like you can definitely stack. But I try to make my my daily goal at that first high. That's the highest probability area. Like if I'm saying that I'm gonna get in down here and I'm looking to take out this high, that's my highest probability right here. So that means that I'm gonna take the biggest chunk off I can. If I want to stack, I would be stacking if it comes back down or above the high as well. So once I see that, all right, we took the high out and then we held this imbalance, you got an option here to enter back in this imbalance,
right,
or to put a buy stop above the old high that they took out.
Okay, now considering the you know, supply demand, you know, way of thinking, that, and I'm not sure if it's called a premium or discount, but when it comes back to that lower fair value gap, wouldn't that be kind of, I guess, what the discounted or the better rate?
Yep.
You go there. Okay.
Yep.
And my stop loss can be so much smaller if I'm catching there. Okay. Cool.
Your stop loss.
And if it also decides to consolidate, you're already out.
Yep. That's exactly right. So using this little area, right? This is your imbalance right here, right? The higher this candle, the lower this candle, right?
Right.
You say, if you measure your imbalance, right? You got the low right here, high right here on this candle, extend this out, and you got 3 entry points for potential entry in between this area right here.
Right.
Right. You got 37.82, 37.75, 37.68, right?
Right.
The body stayed above the high, right? But the wick came down to the middle, right?
Right.
You have your entry points at the high, middle, both of those got met, right?
Right.
Your initial stop loss can be worst case is this low that's right here. That's worst case. That is everything went wrong, right? That is the stop loss you would use if you were going to put a pending order, right? If you want to just put a pending order on these kind of setups, you don't want to ever kind of look back at it. You just want to put in a low risk, high probability trade. This is going to be your stop loss right here. If you want to give it a tighter stop loss, right? That's when you come into, you have this order block, or you have the low of the candle that made the imbalance, right?
Right. Right.
That's going to be your next stop loss, right? Now, you can use a pending order with this, but you're still going to need to pull back on the risk on this, because can it dip down below the order block, right? Yes, it can, because this is an order block, but this is too. And you don't know if it's going to go down into this one and hold, or is it going to go down into this one and hold? And if you look even further on the lower time frame, there is a very, very small fair value gap right here that it also could be coming into, right? So you don't know. So you go heavy on that? No. But is this higher probability? Yes. So you can tighten up your stop loss a little bit, use a little more risk, and maybe, kind of go that. If you're watching this trade, you can use this stop loss, where I'm going to use the low of the imbalance over here. And as long as it doesn't break and close below the low of the imbalance, which is 37.68, I'm cool with getting into this trade with whatever leverage I'm going to use. And then your targets at that point would be this high, and that high.
Right. Yeah. Now, if you were at the lower and you're already taking a portion off, which is, you made your daily goal.
Yeah.
And if you were to be stacking, then you going in, half or even less the lot size.
Yeah.
That additional.
Exactly.
But if that's your first time catching it, then you may go full however you usually enter at those 3 levels.
Exactly. So like, let's say if I went with using 100,000 FTMO account as an example, let's say my initial trade, I went in with a 5% risk, trading it like I'm trading a $10,000 account, right? So that means that my risk that I would be willing to lose is $500, right? So from this to this is a $500 trade, right? Now, if I come up here, I'm pretty much, let's just say I'm gonna just take this high out, right? Because that's kind of 2-to-1 right there, right?
Right.
So 2-to-1 for me on this would put me at $1,000 that I would be earning, right? And that means that I have made $1,000 for the day already once this area is tapped, right? Now, if I'm gonna go in above this high or at this low right here, I cannot risk more than a quarter. So if I just made 1,000, the worst that I'm gonna risk on this trade is maybe $250.
Right.
Because I don't want to take back a large chunk of what I just made. So I want to be able to say that even if I took a loss after adding on, I'm still above my 5% that I want to earn for the day. So if I just made 1,000 and I lost 250, I'm still above the 5% because my 5% would be $500. If I took the $250 loss, that means I would be at $750 for the day. And I'm still above my 5%. That's how you got to look at it.
Cool. Appreciate it.
No problem.
Corey.
Yep.
I need to go through this with you real quick to make sure I understand what you're saying. The box that you created right here, where you would enter into the market again.
This right
Yep.
here.
Yep. Okay. So those 2 candles, the institutional candles, you're saying that you would create that box. Okay, wait a minute. How do I say this? All right. So you have the first candle, then you have the second candle. That third candle it pulls back. You create the box from the low of the third candle. That's the top of the box, and the bottom of the box would be the base of the second candle. Do I follow you so far?
I'll show you. Let me get let me get the power cable right quick. Will my computer die? Give me 1 second.
Mm-hmm.
It's really a 3-candle pattern.
Yep. Yep.
You're gonna look for the high
Mm-hmm.
of a candle that's followed by an engulfing candle.
Right.
And then the candle that's engulfing should make a low after that candle is made. And that 3-candle series is going to be what you would be looking for a bullish engulfing. If you're looking for a bearish engulfing, it's going to be the same thing, just going to be the
The
opposite.
other way around. Right.
Yeah. So this, let me delete this. We'll look at these two right here. So you'll notice, right?
This is my one.
This candle right here,
Mm-hmm.
I'm just going to zoom in a little more.
Mm-hmm.
The high on this candle
Yep. Yep.
is 37.69.10. We can even clean this up a little bit.
Okay.
37.69.10.
Okay.
This high on this candle is followed by an engulfing candle, right?
Yep. Yep. Mm-hmm.
And this engulfing candle takes out this high right here.
Right.
There's your shift in market structure on this lower time frame, right?
Mm-hmm.
Now, if this is going to continue to be if this is going to be an area to consider,
Mm-hmm.
we need to have the candle that follows this candle hold a higher low right here, like it does. The higher low on this candle is 37.82.30, right? So
Mm-hmm.
we're gonna clean this up, 37.82.30, right?
Mm-hmm.
All right, so this is our low for this bullish imbalance. This is our high. The 3 areas you're gonna focus on is the high, the middle, and the low, right?
Okay.
If this is gonna stay bullish, right? The price range that you don't want to see broken is this low at 39.69.10. And if it breaks it, it cannot close below the low that it made right here. This little area right here. If it stays above that, then you know that you should still be good to continue in the direction that you were looking for it to go. Your highest probability is this range right here between the high and the low. I mean, the high and the middle. Those are my favorite. Can you trade it off the low? Yes, you can. But I like trading it off of the high and the middle. And you can see like majority of the bodies right here stayed above 37.82. The low of this never got breached at 37.69.10. But the middle, 37.75, we pretty much came almost down to the middle at 37.76, bounced right off of that and pushed up, right? And then when price came right back down to it, we missed the high of this by like maybe 5 or 6 pips. What is this? The low is 37.82.90.
But it's still valid for a buy.
Still valid for a buy. You can still say this valid for a buy. And you can go and look at this in the opposite direction too, right? So here's an example on the sell side right here, right? This area, this is our impulse candle right here, right?
Mm-hmm.
This is our low that we made right here. The low on this candle is 38.86.70, right?
Mm-hmm.
38, 76, 70. The high on this candle is 38, 78, 20, right? Extend this out.
Okay. Okay.
You see it?
I do see it. I see it.
We extend this out, right?
Mm-hmm. Oh my God. I think I got it. Okay.
All right. Most of these wicks, they cannot breach the middle. You see this?
Yeah, I do see it.
All of these wicks came up to about the middle and they fell. And then you can see most of the bodies of these candles fell near the low. These are your trade setups right here, right? If
Can
you
I
want
use
to,
it for confirmation, or it doesn't matter about the fib? It's just a matter of where the wick is.
the way that the fibs are combined with this is you're going to usually get an order block,
Mm-hmm.
an imbalance,
Mm-hmm.
or a lower high, a lower low. These are going to occur at fib levels.
Yeah, right.
They all are going to occur at fib levels. And you use the combination of your fibs and your imbalances to get the precision, right? So if I went to the way you want to throw your fibs in this, right?
Mm-hmm. Mm-hmm.
All right. This is your last low. I mean, this your last high.
Mm-hmm.
This your last low, right?
Mm-hmm.
Let me look at this one more time.
Oh my goodness. Okay.
So there's an even bigger view, right?
This is on the 1 hour. Okay.
So this would be the high. This
Right.
would be your low, right?
Yeah.
If I measure this, this is actually based off of a daily range, right? This
Mhm.
came up to like the 78 or the 886. I already know it. I can
Mm-hmm.
just look at it, right?
Mm-hmm.
We throw this on here, right?
Mm-hmm.
We would be measuring from this high to this low, right?
Mm-hmm.
And we're gonna use this template right here. And we're gonna flip it.
That's the cut. Mm-hmm.
We're gonna flip it. Okay. This is our 886. Let me stretch this out so you can see it all. All right.
Mm-hmm.
This is a daily fib for this range that we are referring to. The 100 is here. The 0 is here. For this whole time frame, we need to be operating within this range, right? From here to here. Let me annotate this one. You'll be operating in this range from this low, where I got this blue line, blue to this red, right?
Got you.
When we came up to the 50%, that's our equilibrium. What's right here? Imbalance,
I always follow the 50%. So this is
right?
perfect. Thank you.
There's our first imbalance that we need to pay attention to, right?
Mhm.
And we got an order block right here, right near the 50. At the
Mhm.
618, this
Mhm.
is the imbalance right here to here.
Mhm.
There's imbalance from here to here. This is happening just at the 618 into the 70% right here. Here's the 61, here's the 70, right?
Mhm.
And alongside of that, there's an imbalance, right? Also, there's an old low right here. So you
Which
got
is pretty, it's almost in a half of that box.
almost, yep. So you got multiple confirmations. You got fibs, you got imbalance, you got shifting market structure, all
Mhm.
this stuff telling you like light bulb, do what you got to do into your trade. Okay, if that ain't enough, right? It's pushing up higher. This body is at the 786, right? There is also an imbalance right here. And if we go to the 4 hour, you'll see on the 4-hour, that area we referring to, this whole area right here is a 4-hour imbalance. This entire area right here. So all we've been doing is operating within this 4-hour area and then coming down. All right, here's the middle. The middle of our 4-hour imbalance is right here at this 3889 area.
The 3889 area, are okay. I'm sorry. What does that 3889? Oh, that's the price. Okay, that's not.
Yeah.
That's the price. Okay, I'm sorry. Go ahead.
Yeah, 3889 area.
Okay.
And then on the lower time frame, you can see that at the middle of this higher time frame imbalance, there's a lower time frame imbalance right here. So every time you look at the charts, right, you'll see, let me clean some of this stuff off.
So you're boxing off imbalances from wick to wick
Mm-hmm.
and measuring inside those boxes.
Inside those boxes, yep. Because you'll see it on the higher time frame first that, all right, cool, we got an imbalance. So now let me go to the lower time frames and refine it. Once I go to the lower time frames, that's when you can come down and say, if we looking at this area right here that we got, I see price coming to this area. This is a higher time frame area, right? So that means I can be patient. That means I don't have to like go crazy just because, you know, price is doing something, right? Just because the charts are doing something. I don't have to just go and start pressing buttons, right? Because I know that I'm coming to a higher time frame imbalance. So what I'm going to do is I'm going to let it do its thing, do whatever it's going to do. Then, you know, all right, let's see what happens on the 5-minute near the low, right? Hey, I'm going to try to take a sell right here. This is the first time it came to this area. It take the sell, it don't go. All right, cool. I just still made 100 pips off of this, right? I still would have made 100 pips off of this. Still not on this case, but typically you can get at least about 100 pips off of this. It came to the middle, right? It almost came to the middle. Do I take this trade? Yes, maybe, no, maybe not. But all right, here it came right to the middle of the trade of the imbalance right here at 38.81, right? If I had waited on the 1 hour for this to get to this area, and on the 5-minute I could have took my trade, I would have been able to at least take this little drop right here. That was 120 some pips. If I hold on to this, I get to take this drop right here.
That's like the 5 and 10 point TP Kim is always going for, like 5 points.
Right. Then, all right, it comes back up here to the low, right? Over here and over here. If I see this and it hold, I know, all right, cool. We don't come back above the middle. All right, cool. I'm going to take another trade right here. I take that trade. You looking at your goal is to take out the low, right?
Sell it down to the next low.
Yep, that's your goal, right? And if it takes that out, guess what? That's where my money is, right?
That's where it grabs liquidity.
That's when it grabs liquidity, right?
If it doesn't break the middle of that box.
Okay.
Okay.
And once you get to this right here, you just took liquidity out. You can take the majority of your trade out right there. And then if you want to leave a piece in, you want to add on, you got options at that point, right? Because now you know this is where my liquidity is. So if it comes back down to this, there is nothing that's going to hold this up from here. Even if we get a shallow retracement like we did right here, once we came back down here, what happened? We dropped some more. Because at this point, right here, you've taken liquidity out right here.
And not taking out any highs.
Right. And you're not taking out no more highs. That's a good call too. So now you can say, I can market execute down here or here and just deal with the drawdown, or I could put a sell stop below this low or this low and just let it drop and do its own thing. And you would have got this low or this low by holding on to that trade, or you would have had a piece in right here, a piece in right here, piece in right here, took some out right here, and held till you got right here. Because that's the first time you get another shift in the market over here. You don't start taking out highs until you get over here. That's when you start taking out highs. And that's when you can be like, oh, okay, maybe it's time to buy. And then you do the same thing in reverse, right? So, all right, we made our low right here. Right?
Hey, Corey, can I ask you a question before you roll it back up to
Yep.
them on the back? If you'll go back, and I hear you, Miss Annie, talking about we didn't check out no highs. I hear you, sis. So you see where you got you see where you got 38.80, right? That wick that came back into close to the 50%.
Right here.
Yeah, right. And you're on the 5 minute.
Mhm.
Over there, I don't see on this smaller time frame a break of structure with a fair value. I'm sorry, with an impulse candle. So if you take that down to the 3 minute or the 1 minute, that's what I do to try to see if I can find that to give me kind of a confirmation.
You talking about right here and right here?
Yes, sir. That if those areas that it came back into to the
watch this. Watch this. You see these equal lows?
Mm-hmm.
Right.
Right there. And then you see this equal low right here?
Mm-hmm.
These equal lows right here?
Right.
What's this?
Yeah, I see that impulse candle, right?
That's
Creating
your
fair value.
that's your
But I
gap
was
right there.
right, but that's what I
Wouldn't
was
those be
looking
impulse
for.
candles on the higher time frame?
On the higher time frame,
No, I was looking for that
Like on the
on
15 minute?
a 3 minute or 1 minute at that wick place to see that it came back and touched that.
you
Because if
can.
I don't see it on the 5 minute, then I try to see if it's on the 3 minute or the 1 minute. That's something I've been kind of watching Alfredo do and trying to see if that gives me that same type of structure where you just showed it right there. I look for it on the 3 minute or the 1 minute if I don't get it on the 5 minute at that higher level.
Yep.
Okay. Cool.
Yep. That's
Because you
it.
just broke it down from the 4 all the way down, which I was going to ask that question and you did it. I said, okay, so
Yep.
I'm right in thinking with that. But yeah, okay, cool. Thanks, bro.
The main thing is like I get my main imbalances, my main order blocks, my main highs, my main lows. I start higher time frame. Once I know we are at one of those levels on the lower time frame, that's when I'm breaking it down even more minute to get the actual entry, right? That's why I think I was telling Jason and some other guys the other day, like, like even when I'm taking my trades, right? I don't necessarily like y'all know I trade from 7 a.m. to noon, right? I don't trade outside of those hours, right? Can I trade outside of those hours? Absolutely. But I don't need to, because whatever happens within that range, if it comes to one of these higher time frame areas, a middle of an order block, a middle of an imbalance, a low of imbalance, high imbalance, all I'm doing is waiting for it to do what it's going to do at these areas, and then I'm going to react. And I just want to know, all right, we on the 4-hour time frame in this area or the 1-hour time frame in this area, right? And then once I see that we here in this area, right? We over here at this 1 hour imbalance. and it's between 7 a.m. and noon. This is what is this? 9 o'clock. All right, 9:35. All right, cool. I know. All right, we pushing up. If we don't close above this, it's a high probability that we drop. Right? If I can't get the entry from here, I know, all right, cool. This low right here, if we come back down to this low and we can't close above this, I could probably put a sell stop below this low and just let it drop. And then I'll just have to lower my lot size so that I can use this as my stop loss and then just let this drop and do what it's gonna do. That's how you gotta look at it. Same thing over here. All right. We know that price is already moved off of this 1, 2, 3, 4, 5, 6 times, right?
And your
And
target
now,
would have been that 4-hour FVG line.
exactly. At least if it comes back up here, I'm at least looking to take this low out right here. Because now I know that if it's trading off of this and it can't hold, that's my last significant low. I should at least be able to take it back down here like it did right here. And if it doesn't, all right, cool. I know at least I could take it down to this low because maybe it wants to come down here and hold and then bounce and push up like it tried to do right here. This is its attempt to try to push back up right here and right here. And it didn't do it. Cool. And another confirmation is, all right,
More imbalances.
more imbalances, right? This is an imbalance. This is an imbalance. We don't trade above this imbalance right here. That's an order block. We can't trade above this. Equal highs right here. We can't trade above this. And then what we do, we come back and take out a new low. We put another order block in right here. We create a new imbalance right here. We can't trade above. We can't even trade above the middle of this right here. And then we go lower. So you like, it's just a repeating cycle. Like this stuff is repeats itself over and over. If it's an up move, let me copy this. I need to copy this. If it's an up move, right? Your up move always gonna look like a low or consolidation in this area to make a high. Then you're gonna see possibly a drop. You can see some, or this can be consolidation. Then you're gonna see an order block down here somewhere, right? And in this order block, you're gonna see a short-term high being made right here. Let's drop this short-term high. Always, right? As you see the short-term high made, you're going to see an imbalance. And that imbalance is going to take this short-term high out and possibly this high out, a older high out, right? And when that's done, you're going to see a new high be created. A new short-term high. A new short-term high, right? This is your sign when you see that this high get taken out with the imbalance. That's going to be your shift in market structure to know that if it comes back inside of this area right here and it holds, then we should be able to buy this continue situation back up. And that's going to be your fair value gap or fair value gap and order block combination, where as long as it doesn't close below this and this imbalance, you know you can take the buy up. So the wick might come all the way down to here, and then you can take the buy up. Then this is going to repeat just like that.
Corey.
Yep.
You just said fair value.
Mm-hmm.
Okay, question about the terms that you're using. Are these terms that you created, or are these actual market terms that I can look up?
Market terms.
Market terms. Okay, I wasn't sure. I wanted to ask. Thank you.
That's all right. That's okay.
Hey, bro.
Yep.
I was just saying hello to everybody. I know I might lose signal in a second.
Yo, what's up, man?
You all good out there?
Yep.
Cool.
Yeah, this is all like institutional smart money concepts. All this stuff I'm talking about is smart money stuff. Everything I'm talking about. So, and just like this is for a buy, this would be the exact same thing on a sell. So when I'm looking, just to kind of close it out, let me go over dollar right quick, and let me get. Let me go over dollar. Let me find that chart.
Hey, Eileen. What I had noticed with I guess with those terms, fair value gap, I think that's when the institutions move the market and they don't really give fair value to everybody to be able to trade at that price. And so that's why it has to come back and go back to that price to make it fair value. But it's the same thing, of course, it's like an imbalance and everything. But yeah, that's when the market moves and it doesn't give you a chance to jump in. And that's why it goes back to that position, so that it gives you guys gives us a chance to get back in.
Yep.
Gotcha. Thank you, Fabian.
The actual, you're absolutely right. It is exactly that. And to go in further in detail, like for the market makers, for the banks and stuff like that, for them to push a market up, right? And to think about it in terms of putting in orders, right? They can't put the amount of orders that they want to put in at this particular level right here. Like they're putting in like the size of orders that are so big, like it requires a lot of momentum, right? So for them to put all of their orders in, they have to stack it in, right? They have to put some in right here, some in right here, some in right here. But they're not just going to put the order in, right? They need to drive the market down to create the orders in order to buy them up, right? So that's why you get those order blocks, right? An order block is just basically a move to the downside to create the sense of selling the market in order to buy those orders to the upside. And then if they want to buy, that's what they have to do. If they want to sell, they have to create the sense of the market pushing up in order to buy those orders to the downside. I mean, to sell those orders to the downside to make the market go lower, right? So once the price gets to a certain level, right? Let's just use this, right? If I'm gonna sell the market, right? When I sell the market, like I think I talked about this to you guys before, but when you buy and sell, right? You're actually entering 3 different orders, right? You're actually, each time you enter a trade, you're actually entering 3 different orders. You're entering for a buy, and then your buy order is wrapped up with 2 sell orders every time you enter a buy order, right? And then whenever you enter a sell order, you're actually entering in 2 buy orders at the same time. And even if you don't actually enter them in, you that's what you have to put in to close that trade out, right? So look at it like this, right? This is my buy, this is my sell. If I get stopped out, if this is my stop loss and this is my target, if I sell to take this lower, I have to buy my way back out the market. If I sell and this goes up to take me out at my stop loss, I have to buy my way out of the sell to close that trade out, right? If I buy myself into a trade, I have to sell myself out to get my stop loss taken out. If I buy it and it hits my target, I have to sell my way out once I hit my target, right? And even if I enter a trade and I don't have a stop loss in, or if I don't have a target in, at any point that I want to close this trade out, I have to sell myself out of the trade. Just like I have to buy myself out of a sell. So if I have, like, you'll see, right? A lot of times you'll have some type of liquidity in this area, right? What they'll do is when they know that they have some liquidity right here, they'll trigger a sell, right? And it's going to look like this. They're going to trigger a sell around this area. This is an area where a lot of people are going to look to sell as well, because they know that this is a significant low. There's maybe structure right here. And then once they trigger those sales, they're going to have this type of setup come into play. A bunch of sell orders, right? How do these people get out of the trade? They got to place buy orders. And now they know, all right, cool, I can buy those orders up. I can buy all of those people who are selling right here and buy them up to make a new high. It looks like this right here. I triggered the market to sell off. I had an old high. I triggered it to sell off right here. I knew they were going to try to sell it. And then as soon as they tried to sell it, I bought all these up to go higher. Same thing right here. Liquidity. People are going to try to sell it. I triggered the sell. I bought it back up to go higher. That's the same thing that happened right here. If you were looking in the opposite direction and you wanted to sell to take it to go lower, this is even in a bullish market. So you don't have a lot of examples, right? But I'm triggering this to go lower. I'm selling it right here. Triggering this to go lower. I'm selling it right here. And it's a repeated cycle, right? But yeah, so I hope you understand that. So
That gave me much clarity. Thank you so much.
This is basically what an order block is. That's basically what an imbalance is price being triggered by the banks. Imbalance. Hold on. That's basically all that it is price being triggered by the institution. And so just to kind of wrap up, let me look at dollar right quick. Still in this imbalance right here. And we got this imbalance from the weekly. that we kind of been trading into. We already came pretty much to the middle on this wick, and we holding this off of the daily. So it's still, I think that we will probably get to this 110 above area, because if we do a 75 to 100 basis point move, that's probably going to push us up above this. And it might not be immediately, it might be a delayed move, but we already kind of got this area holding already on a daily. And then as we projected, we would come up to this weekly imbalance and kind of hold this area. And if we can get back inside of this, we'll probably use this 107 area to push us up above this. So that's kind of what I'm looking for if we get that higher interest rate increase. So I'm just going to send this. There's really no need to make any changes on this.
Hey Corey, real quick.
Yep.
So with the interest rate increases, is that ever priced in already, or does it just react off of the actual action that the Fed makes?
There's always a possibility for price action. It's one of those situations where we can't really tell until after the fact whether it was priced in or not. Because if we get a slight move or delayed move, that's a sign that it's being priced in already. Or if we don't have a significant change in the direction, like let's say we were already going up, we only had a slight move down, and then we still keep going up, that's a sign that it's been priced in. A good example was if you look at the last interest rate release, SPX, it had already been kind of going up. It did drop, but it didn't like stay low. It kind of pushed up after that. So that was a kind of sign that it was already priced in that they were going to do this kind of move. And if we can hold this with dollar, like I just sent y'all the chart on that too, then we already know Euro USD still got this imbalance right here that we need to come back to. And if it comes back to this as dollar is pushing up, you can pretty much expect this to reject in this area. So same thing, we don't need to make too many changes off of this. We can move this down though. We can move this down to here. This is the range we need to focus on right here. As far as the fibs go, from this high to this low on a daily, you can see where our imbalance is. It's basically hanging in between 70% and the 50%. The middle of this imbalance is right around 618. So that's highest probability where we have some rejection from. But can it push up to the 786? Absolutely can. We got an order block and we got the monthly sitting right there, but higher probability is right here in this range. So we're gonna stay with that thesis that we don't come above that 618. This EU. This is EU. Hey, y'all. It's like 1:30 in the morning over here.
Where
GU.
you at, bro?
I'm in Thailand.
Oh, so I saw on your IG, I saw like some sand dunes or something.
Yeah, I was in Dubai.
Trying to be like you when I grow up. I swear.
Me too,
Here-
man. Me too.
Here-
He's just
This is why I call him a wizard,
Right.
Corey.
Yeah. Yeah. Yeah, we are in Phuket right now. We are in Phuket. And we flew through Dubai. So those were those pictures were from. But we actually stayed there for a few days. So we can
Going next, Corey.
we gonna be here for a minute. For a little minute.
That's a goal statement right there. We're gonna be here for a minute.
Yeah.
I know.
You don't even know when you're coming back. You're just like, we'll be here for a minute.
Yeah, we'll be here for a minute.
Oh, those are goals.
I have a surgery in September. So I gotta be back in September.
For what?
Brother says, say what now?
Yeah, I got surgery. I got to I have two things going on. I have a cyst on my index finger, and then I have a genetic disease that I just found out I have. It's called synovial chromiatosis. And it's like if I take too large of falls, which apparently I did, and jumping out of airplanes and all that kind of other crazy stuff. But there's something called a synovial sac. It sits in between your bones and it sits in between your bones, right? It's like the gel that sits in between your bones. Because I've taken so many falls, injuries, there's like callus buildup and inside of that, and it's shattered, and it is shattered to the point where there's about 100 to about 50 to 100 pieces of callus floating around in my hip. Everybody doesn't have this disease. It's just something you can't get tested for. You just have to get injured, and if you see spider web looking things around your joints, that means that you have this. And I found out that I have this, and it's damaged like two of my nerves. I have two cysts. I have two tumors, and I have two torn ligaments, and they are going to go in and take all that stuff out. It's not something that's going to go away. They just going to scrape out and clean it out as much as they can. And one of the tumors is by my sciatic nerve. So sometimes I can't even move my leg because it's tapping my sciatic nerve. They can't touch that. And they're going to repair the tears that I have, and they're going to test the tumors for cancer. So, yeah.
They're doing all that there?
Not here. This is going to be back. That's why I got to come back in September.
So is it going to be robotic?
I don't know. I'm still waiting to hear.
Oh boy.
Yes.
So enjoy it up until it happens. So just keep enjoying your life.
Yeah.
Definitely keeping you in prayers and claiming a speedy, thorough recovery.
The recovery time is not that bad. It's only 4 to 6 weeks.
If you can get it done robotically, it'll be even faster.
Yeah, I don't know. We gonna see.
You plan on being still afterwards?
Nah, man, I'm still doing.
Your brother just said no too.
Yeah, I'm still doing jujitsu and everything.
I know. That's my man.
Yeah, man, I can't do it. So I just sent y'all GU, EU, dollar, NAS, as SPY. I didn't do US 30. It actually hurts me worse when I don't do nothing. That's what bothers me.
Exactly.
Yeah, so when I'm not doing nothing, that's when it's bothering me. But yeah. Yep. But you know, I ain't worried about it. It is what it is. Let's go. It's US 30. I'm just gonna give y'all the chart because if you understood everything, then you know what's going on. See where we are in balance. Pop, right here. We sitting inside of here. Bearish imbalance. And then if we go to 4 hour, right? Look at where we are. Let me get the numbers right quick. Week to body right here. Yeah. Okay. The middle is 31,851. We can round that to 850, right? 32,250. That's where the high is. You see where that wick is? Missed that. So now we hanging around the middle, meaning we can go up or down in this area because we already came down. So that means we need to look out for this on the upside. This one is a imbalance right here. You need to watch what happens in that little area.
Why didn't you measure that whole imbalance?
What you mean? Oh, yeah, I mean, I could. This whole from right here to here. Here, all the way down to here.
Mm-hmm.
I could. Yeah, I could. But just to be precise. So this would be the next range right here. If we go up, we can look to buy up into this area right here. If we look to sell, we can sell down to this body, to the low of this imbalance at least, and then we can go down to 4 hour and get even more defined areas. Right over here, we got some overlapping going on. Here's that imbalance on the 4 hour to the upside. Right here. I'm gonna just delete this. Oops. So we already tapped into it right here. Tapped into the high. Pretty much came down to the middle. The middle lines up with the low of that bearish. So we still kind of hold in that area. And then, you know, if we want to go further down into that, you can see we got this one right here. Right over here. But we're gonna focus on these two for now. So if we look to buy from above this high, once we break above this high, we push into this imbalance. And we already know we got the low to the middle to be targets, right? If we sell off from here, we know we got the high down to the middle, which is right around here as a target. And then if it continues, this will be our next area for this to sell to. But once we get right here, we can start looking for our buys here and here. But on the lower time frame, we need to make sure we get a clean confirmation in this area if we come down to here, because we might want to take this low out first, right? If we buy from here, right, you know you're going to be looking to take this high out into this imbalance over here. So, and then once you can use this high, this level, and this level as your primary targets. Okay. So that one's easy. It's following along with the rest of it. And I think that's it. Kill should probably come to. Appreciate y'all. Miss Tate coming to Houston for training. Miss Tate. Boy. Miss Tate.
Yeah, I'm here.
So Corey, this means I'm not gonna see you in Glendale.
That's in September, right? That's in September, right?
Yeah, it's in September.
September what?
I forgot. 15th something.
The 18th.
Glendale, California?
No, Phoenix,
Arizona.
Arizona. Yeah.
Oh.
Are y'all coming?
I don't know if I'm gonna be back yet.
Okay. I'm so sad. I'm sad about your surgery too, but I mean, well, I could always come see you because we're both short.
You know where I lived.
Yes, I do. I know.
Yeah. You know where I live.
Well, I don't know, but I can get there.
Let me get your flight benefits, Miss Tate.
I know
Yeah,
that's right.
Fight
That's right.
to Atlanta and see us. I would love to see y'all in Atlanta. Miss Tate, we were calling you on a call today. I was trying to help you with your object tree.
Oh, I had to go. Oh man, I didn't know. I thought you were gonna forget again.
No,
I didn't
we
mean
stopped
again.
class early.
Okay.
But I can help you. I can help you still. I could just call you and help you.
Okay.
Okay.
You guys got anything else? I'm just let me get these charts right quick and give y'all the link for this right quick. So let me stop streaming. Have a comment. Okay, cool. No more questions.